Good afternoon, my name is Jordan Lambert, market analyst at Jalotama Management. After the dust has settled, fundamentally speaking, both equities and the gold market are in the same scenario as before Bernanke's comments during the FOMC press conference, as the central bank chief refrained from giving any specific schedule for the slowdown in bond purchases. Instead, he just alluded to the fact that any winding down will be data dependent. So we use very similar language to previous statements this year. However, his upbeat tone on the economy and mentioning that downside risks were diminishing means that we are more likely to see a tapering on some level later this year, with the September policy meeting being a major focus. Gold reacted badly during the statement and press conference, falling from around 1374 to a low of 1339. 1339 was a level that received some buy orders, causing a bounce, as this level, well, 1338 to be precise, was a support level in May. So this caused a bit of a bounce. And the sell-off was mainly attributed to panic rather than substance, because as I mentioned, we are in the same scenario, fundamentally speaking. The Fed are only going to wind down bond purchases if the economic data is there to support it. So we, with the mixed bag of data that we are getting at the moment, any definitive timeline for that is very uncertain, and that's why Bernanke himself couldn't really pinpoint a time for when he will begin to slow down the purchases. So gold is in the same scenario, but it caused a sell-off, and it has been unable to recover, and it does look like the technicals are taking charge now. If we take a look at the weekly chart, we can see that the momentum indicator has finally bounced off its own trend line, its own bearish trend line here. So just here, it has bounced off, which shows that downward motion is building again, and we could see quite another test of 1338, 39 support rather soon. We are seeing a nice descending triangle form here. Now we have a series of lower highs, and we have a horizontal support line. We can easily draw a descending triangle, and these patterns are one of the most reliable and powerful patterns around, and shorting a market once it has gone through support, it can be the fastest way to make money, as it triggers a lot of buy orders just beneath support, downward momentum builds, panic pervades through the market, and that can result in some significant profits if you are on the right side of that. So if we do get another test of the support at 1338 within the next 24 hours, the support line is likely to give way to the bears. But as price draws near, zoom into a shorter time frame to see if we are seeing a series of lower highs, because lower highs are important to consider, because it just, especially when price is looking to attack a support level, because it shows that the bears are shorting the market at decreasingly lower prices. So it just shows that the bears are becoming more aggressive and confident that they can break down the support. So lower highs are very important, and zoom into the shorter time frame as well, because if price does approach 1338, 39 level again, we might see a small bounce, but if we see lower highs and we see shorter intervals between the tests of support, it just builds up selling pressure, and it just builds the probability that we are going to see a breakthrough. So it is quite an important time for gold at the moment. This support level at 1338 really is key, and at the moment the factors make it look like we could see another test. If we do see another test in a short space of time, it is likely to give way. Right, so today we have a busy schedule ahead. We have manufacturing PMIs from Europe and the US, and we also have US weekly jobless claims and existing home sales data. That is to name a few. So it would be advisable to have your economic calendar ready to view any of these figures released, and you can trade accordingly. Thank you very much for your time, and I'll speak to you again tomorrow. We have a fantastic promotion for new accounts at the moment. If you are interested, check out the details either on the Facebook page of Jalatama or LinkedIn. Alternatively, you can visit the website of Jalatama Management. The required links are below this video. Speak to you soon.